Good morning and welcome to another edition of the Economy and Politics Show. It's Tuesday, September 29, 2020. We bring this conversation looking at the oil and gas sector. And today we'll be taking 6 decades of the Nigerian oil and gas sector, the way forward. As we all know, oil and gas has been the big industry driving our economy and remains a strong fortress for the country. Just to cap it up, second quarter 2020, the growth rates from the oil and gas sector was minus 6.6%. It contracted, and that's why it had a wider impact on the entire economy, because the economy contracted overall minus 6.1%. So what are we looking at today? We will be looking at the reported sending of the PIB to the National Assembly by President Muhammadu Buhari. It was reported yesterday that he sent that revised PIB to the National Assembly. The Nigerian National Petroleum Corporation and SEPCO signed the gas development deal. Give you some slight insight into it. We'll look at local refining prospects in Nigeria, and also the federal government and labor agreements on the regulation that led to the strike being averted, and Major Marketers Association of Nigeria, MOMAN, hails the regulation moved by federal government. And then we'll now drill down to 6 decades of Nigeria's oil and gas sector and give you the way forward. Let's begin with the reports, according to Punch yesterday, that President Muhammadu Buhari sent the revised version of the Petroleum Industry Bill to the National Assembly for consideration and passage. The bill, according to reports, seeks to scrap the Nigerian National Petroleum Corporation and the Petroleum Product Pricing Regulatory Agency, PPRA. The newspaper said the proposed law will in turn establish the Nigerian National Petroleum Company Limited, after all the assets and liabilities of the NNPC have been identified by the Ministers of Petroleum Resources and Finance. The bill also seeks to establish the Nigerian Upstream Regulatory Commission and Downstream Petroleum Regulatory Authority, which is a new development. The Minister of Petroleum and Minister of Finance will determine the assets, interests, and liabilities of the NNPC to be transferred to the NNPC Limited or its subsidiaries, and upon identification, the Minister shall cause such assets, interests, and liabilities to be transferred to NNPC. The newspaper quoted part of the bill. Assets, interests, and liabilities of NNPC not transferred to NNPC Limited or its subsidiary under subsection 1 of this section shall remain the assets, interest, and liabilities of NNPC until they become extinguished or transferred to the government. NNPC shall cease to exist after its remaining assets, interest, and liabilities other than its interest, assets, and liabilities transferred to NNPC Limited or its subsidiaries under subsection 1 of this section. It shall have been extinguished or transferred to the government. The minister also under the provision shall be at the incorporation of the NNPC Limited, consult with the Minister of Finance to determine the number and nominal value of the shares to be allotted, which shall form the initial paid-up share capital of the NNPC Limited. And the government shall subscribe and pay cash for the shares. Now, ownership of all shares in NNPC Limited shall be vested in the government at incorporation and held by the Ministry of Finance, incorporated on behalf of the government. Steps to reform the country's oil and gas sector began in 1999, but successive administrations failed to achieve the feat. Different sessions of the National Assembly had difficulty passing the bill for different reasons. And most people will put it like this: vested interest. But we'll be monitoring this development to see how it goes. Updates from the National Assembly said they've not received any revised bill from the presidency. So we will continue to monitor this development. But definitely, the whole industry agrees that we're long overdue for a PIB that will make the industry work, and that will be part of our discussions much later in this program. Let's go on to a very interesting developments. The OML, Oil Mining License 143, was sealed between the Nigerian National Petroleum Corporation and SEPCO, where they signed a gas development deal for the industry. The content shows that the Nigerian National Petroleum Corporation and Sterling Exploration and Energy Production Company signed an agreement for the development and commercialization of the gas from oil mining lease 143 that could help reduce gas flaring in the country. Speaking at the agreement signing ceremony recently, which held at the NNPC Towers, the Group Managing Director of NNPC, Malam Mele Kyari, described the execution of the deal as a great milestone, as well as a testament to NNPC's commitment to facilitating the nation's transformation into a gas-powered economy. He said the deal will not only help reduce gas flaring and its environmental hazards, but will also promote gas production and utilization in the domestic markets. The GMD also commended SIPCO for its unwavering commitment to gas development and commercialization in the country, which has led to the establishment of Special Purpose Vehicle (SPV) that will help expand gas utilization in the country as a cleaner, cheaper, and more reliable alternative form of energy. On this part, the chairman of SEPCO, Mr. Tony Chukwueke, described the deal as an essential partnership that will help the company fulfill the pledge it made to support the efforts of the federal government to eliminate gas flaring by monetizing it. He commended NNPC and the GMD for ensuring the execution of the agreement, which he described central to the achievement of the company's cardinal objective of boosting the production of liquefied petroleum gas, condensate, and dry gas for the Nigerian market, adding that the company has invested about $600 million for that purpose. Very, very huge amounts from SEPCO, and that is remarkable. Let's go into a very interesting topic, and it's part of what we'll be looking at much later. It's about local refining. It was designed to ensure that we can boost local capacity and also have enough supply and reduce importation. But there's so much that's happened over 6 decades in the Nigerian oil and gas sector. These reports from last week show the Vice President, Professor Yemi Osinbajo, speaking at the virtual meeting, and this is captured from CSL Stockbroking, that the problems associated with Nigeria's refineries will persist if the federal government continues to own and run them. Currently, the federal government manages 3 refineries in Kaduna, Port Harcourt, and in Warri. According to him, the government should have no business running refineries, as they should be in the hands of the private sector. He further noted that the government's focus currently is to assist the private sector develop modular refineries. He listed a few private refineries coming on stream, which include the 100,000 barrels per day refinery located near Port Harcourt, the Niger Delta Petroleum Refinery in Delta State, and 6 modular refineries that should come on stream very soon. Now, about 90% of the refined petroleum products consumed in Nigeria are imported, which is very, very unacceptable. The nation's refineries, like I earlier said, are located in Kaduna, Warri, and Port Harcourt, with a combined nameplate capacity of 445,000 barrels per day. They've long operated at low levels, and despite contracts of turnaround maintenance, they have yet to show the value of the investments. So it has been many years of underinvestment and poor maintenance, despite continuous talk of revamping the refineries even in 2019. Combined capacity utilization of Nigerian refineries fell to 2.5%, an all-time low annual activity level since 1998, when NNPC started providing the data. Now, last year, the Pipelines and Product Marketing Company, PPMC, reported that it imported about 9,158,528 metric tons of refined products. That's PMS, HHK, AGO, and ATK, while it evacuated over 963,202 metric tons of refined products from Nigerian refineries, implying local production was just at 10.5% of total refined products available for distribution. Going by the historical performance of these refineries, it is safe, according to CSL Stockbroking, to agree with the Vice President that the Nigerian government has no business running refineries. Aside the modular refineries mentioned by the VP, expected to come on stream very soon, the country is also patiently awaiting the Dangote 650,000 barrels per day capacity refinery. So all the 3 refineries in Nigeria combined is not even up to what this refinery will produce. And then the Boa Group, who is planning a 200,000 barrels per day refinery and petrochemical plant in Akwa Ibom State. Although it is widely believed that the local refinery operations will reduce the nation's reliance on imported refined products, the question in the minds of many Nigerians is how local refining of petroleum will impact the pump price. That's the big question. How will it impact the pump price? In this regard, the Minister of Finance, Budget and National Planning, Mr. Zainab Ahmed, has stated that refining petrol locally will not significantly reduce the price of petrol, just for everyone to take note of. since the refiners will be selling at the international price, noting that the only expected savings will be freight or shipping. That said, Nigeria as a country, according to CSL, has a lot to benefit from being a net exporter of refined petroleum products. Nigeria is the second largest producer of oil in Africa. The combination of rising shale production in the US, continued oversupply in the export market, and weak demand means the market for Nigerian crude is quite uncertain, and a shift from export of crude to refined products bodes well for the country. The startup of these refineries will also attract investments in warehousing and storage facilities, enhance employment opportunities, and conserve the foreign exchange earnings of the country. So you now understand why we need to take local refining seriously and why it will help create more value in the economy. Well, it's been a very busy week already for Labour and the federal government. On Sunday, there was over a 7-hour meeting that helped to avert a nationwide strike. What was on the table was the need for government to revisit its decision on the premium motor spirit, the pricing and the regulation process. So at the end of that meeting, the Group Managing Director of the Nigerian National Petroleum Corporation was happy to say that they reached an agreement and accord to suspend the planned strike, great responsibility for both government and Labour, all serving the common good, beneficial challenge for the NNPC, who will follow through diligently with the decisions. According to Mr. Mele Kolokiari, the NLC and TUC, that's Nigerian Labour Congress and Trade Union Congress, demonstrated absolute faith in the country and showed understanding on the inevitability of the Premium Motor Spirit Deregulation, PMS, and jointly charted way forward to secure local refining sufficiency through greater stakeholder inclusiveness and transparency. And Mr. Kolokiari assured that this will be followed through diligently. He said, he being a former union leader himself, he understands the difficulties of Labour leadership when faced with choices between stark realities and legitimate follower expectations. The leadership choose the pursuit of common good, and posterity will vindicate them for standing with the country. And hopefully, Nigerians are watching, hopefully this will really augur well for us, because we've been through this road for a long time. We need to see tangible efforts and impact. Still talking about this deregulation and developments around the policy. Well, Labour has agreed with the federal government, several steps will be taken. But one strong group that is in full support of the deregulation of the downstream sector is the Major Oil Marketers Association of Nigeria, MOMAN. They lauded the federal government for the courage to tackle the challenges in the downstream sector frontally. Recently, through a press release, it said that the stakeholders gave the commendation in a downstream stakeholders meeting which held at the NNPC Towers. Speaking at the meeting, the president of MOMAN, Mr. Tunji Oyebanji, said the federal government displayed utmost pragmatism by applying economic solution to the age-long challenges in the downstream rather than the political solutions applied in the past which were not sustainable. He commended the Group Managing Director of the Nigerian National Petroleum Corporation, Malam Mele Kolokiari, for extending the engagement to the leaders of all workers' unions who have been opposed to the regulation, and called on them to adopt a different approach to the issue this time around. According to MOMAN's president, Mr. Tunji Oyebanji, this is the first time we're having Inupeng and Pengasa in the meeting. This underlines the style of the GMD. I commend him. We can't do the same thing over and over again and expect a different result. That's what he said. On her part, the Vice President of Depots and Petroleum Products Marketers Association of Nigeria, DAPMAN, Haji Amina Maina, said the subsidy regime was of no benefit to anyone and commended the Group Managing Director for the engagements. All the stakeholders present, including Petroleum Tankers Drivers Association, the National Union of Petroleum and Natural Gas Workers, and the Petroleum and Natural Gas Senior Staff Association of Nigeria, Pengasan, pledged their support for efforts of the federal government and the NNPC to ensure a viable and sustainable downstream petroleum sector. Speaking earlier, the Group Managing Director of NNPC, Malam Mele Kolokiari, disclosed that concrete steps have been taken to address the main concerns of marketers, especially the issue of availability of foreign exchange, stressing that the Central Bank of Nigeria has already taken the first step of merging all forex windows to have a unified exchange rate. According to him, it is really not in our interest to be the sole importer of premium motor spirit in the country. We have taken definite steps to exit the situation. It's a definite step taken, and the details will be communicated to stakeholders like MOMAN, DAPMAN, and IPMAN, that's the Independent Petroleum Market Association of Nigeria, and others outside this forum, he said. On the issue of subsidy on forex for marketers, he explained that the government has spent 2.13 trillion naira from 2016 to 2019 alone on subsidy. That's massive. Describing the situation as unsustainable and unprogressive. Malam Kolokiari said there were plans by the government to inject about 2.7 trillion naira into the economy to stimulate production, stabilize the exchange rate, and cushion the inflationary effect of the pump price increase. He also revealed that in response to the concerns raised recently by members of the Nigerian Association of Road Transport Owners, NARTO, over the state of roads, especially those on the Niger State axis, the federal government has commenced aggressive road repair works to allay their fears. The NNPC helmsman said that measures have been put in place to ensure adequate supply of petroleum products for the end of the year festivities and the projected increase in the movement of people across the length and breadth of the country in this period. He said the federal government was keen on driving the deregulation program to create value for the country and ensure that Nigerians enjoy the benefits. Also in his remarks, the director of the Department of Petroleum Resources, DPR, Mr. Sarki Awalu, who was represented by the agency's Assistant Director, Depots, Products and Jetties, Mr. Bashir Sadiq, said government was interested in opening up the downstream sector, adding that the DPR was in support of NNPC's initiatives in the sector. Very interesting insights from that conversation, showing you how important the coordination of activities and stakeholder engagement is to the Nigerian oil and gas sector. So in a nutshell, we're seeing that stakeholders are embracing the deregulation of the downstream sector. Subsidy is now described as something that's a huge waste. I mean, imagine spending 2.17 trillion naira between 2016 to 2019 on subsidy. Imagine that money was deployed for healthcare, education, human capital. Where do you think Nigeria will be now? Or even 2-3 significant infrastructure projects, you will feel the impact. So definitely, the problem of Nigerians has never been the subsidy removal and downstream deregulation. I believe the major challenge, which we'll discuss now, is the transparency in the whole process. Remember Shopee, 2012, when we had the historic Ojota protests and all that, you had what you call the Shopee, that's the Subsidy Reinvestment Program. It was chaired by Dr. Christopher Kolade. It was supposed to reinvest into healthcare, into education, into easing transportation for Nigerians. Dr. Kolade said it was smeared in corruption. So, again, a challenge in the oil and gas sector. But let's go to 6 decades of Nigeria's oil and gas industry. We're going to be marking 6th-year anniversary, Diamond Jubilee for Nigeria. Very, very laudable feat for a nation. Many countries, same year, gaining independence in Nigeria, today are not together. How has it been in this industry? It all started with the discovery of crude oil in Oloibiri, with the Bayelsa State, 1958. And then that discovery led to investments by oil and gas majors like Chevron, ExxonMobil, Total, and Eni, amongst others. Then, activities began in crude oil. So prior to now, agriculture was a major revenue earner, but before you knew it, from the late 70s to the 80s, crude oil became Nigeria's major revenue earner. And then these intense activities of the oil and gas sector led to environmental issues in the Niger Delta. Think about the whole issues of Ogoni in Bayelsa State, where the late Kenule Saruiwa environmentalist stood for his people, but was killed later in the military junta of General Sani Abacha of blessed memory. So that was a template of the kind of challenge the Niger Delta has been going through across all boards, so Tumara to various communities down to Ekets in Akwa Ibom State. Oil communities facing spillage, degradation, and challenges amidst the huge revenue that was coming from that region. And then we move on to the NNPC, Nigerian National Petroleum Corporation. We had refineries, like we said it, Port Harcourt, Warri, and Kaduna. But all of a sudden, despite the monies put in, they all did not function effectively from the late 90s, despite turnaround maintenance contracts signed. But one historic development in this sector was the development of the local content law. That marked a turning point for the Nigerian oil and gas sector because it brought the emergence of indigenous oil and gas players like today Owando and even Seplat. So that's a positive in terms of what has happened in the industry. Then we had the developments, of course, and wranglings around the Petroleum Industry Bill. This PIB, the development started since the 90s. For those of us that follow oil and gas industry, you remember Dr. Rewanu Lukman, who I will describe as one of the longest serving petroleum ministers in Nigeria. He was former Secretary General of OPEC, oil producing exporting countries. He was among those that developed the PIB, but till today, like I just said earlier, the PIB is still at the level of being considered and even passed before signed into law. Then we've had the issues of subsidy. Remember 2012, the Ojota famous protest in Lagos and the mobilization of protests in Abuja. That was when former President Goodluck Jonathan was in the seat of power, and of course, the whole civil society, labor, and every other groups came together to say we cannot continue to sustain or remove subsidy without transparency. So it was resisted at that time. But over the years now, we've seen that it's been a waste because it's not translating to development, which of course called for transparency in the industry. Then we moved on to OPEC, and membership of OPEC has helped to stabilize production, revenue, and of course, this has, like I said earlier, Nigeria has produced 2 Secretary Generals of OPEC. Current Secretary General is Dr. Mohammed Barkindo, while the former was late Dr. Rewanu Lukman. We've seen a renewed focus on gas-led industrialization. That's one big thing that we can take away for our 6 decades of oil and gas activities. A gas-led industrialization, take the success story of the Nigeria liquefied natural gas projects and the various trains that are coming on board, and the various other gas projects and agreements we're seeing round the clock, activities involving even Seplat and Wando again, indigenous oil and gas companies, and various other companies like we just announced, the Sterling Energy Production Company agreement with the Nigeria National Petroleum Corporation. And then new investments in refineries, now driven more by indigenous players. Dangote Petrochemical, a Nigerian, Alhaji Aliko Dangote, building the single biggest petrochemical refinery in the country, 650,000 barrels per day capacity. Combined all the 3 refineries in Nigeria that have been existing, they are now up to that capacity. And then BUA is also taking up the challenge. It's going to set up a 200,000 barrels per day capacity in Akwa Ibom State. We're seeing modular refineries. Already we're seeing one in Imo State, supposed to be at the end of production activities, over 50,000 barrels per day. In Edo State, we're also seeing a modular refinery and several other modular refineries that are going across the country. And then also we're having the oil and gas free trade zones. A major one is in One, and it's helping to enable logistics and development of the sector. As you all know that for the oil and gas sector, shipments, freights, movement is very important. And so the oil and gas free trade zone has become a very interesting story of what is happening, providing the enabler for logistics, ease of movement of oil and gas platforms and shipments, and remarkable work going on there. The managing director of the Oil and Gas Free Trade Zone Authority, Mr. Umana, several years ago was awarded with one government institution that is doing very well in the ease of doing business at the Presidential Enabling Business Environment Council Awards, PEVEC Awards, just showing you that now the government is seeing the importance of having that specialized zone that can boost activities in the petroleum and gas sector. And if that is strengthened with more investment in the capacity of that OGFZA, we will see more activities and boost the development of the sector. Now, we've seen all this evolution in the oil and gas sector. But what is the way forward for the country? 6 decades of oil and gas operations, huge revenues derived. But what's the way forward? Because in reality, we are not there yet. 6th largest producer of crude oil in the world, and we don't have functional refineries. We don't have issues around transparency, because it becomes a challenge. But let's get to the way forward, because those conversations for another time. The first is the need for effective reforms, and it's nice to hear, though the National Assembly has not confirmed, we were still monitoring it, that the Petroleum Industry Bill, which is long overdue and is expected to come through, it is very important. It is very important that the Presidency and the National Assembly expedite steps to pass and sign this PIB into law. It's long overdue. Everything that needs to be addressed has to be addressed and signed into law. Why is it important? Because it will bring a comprehensive legislation into law that will enable the uncoupling, unbundling of the sector, liberalization of the sector that will lead to its transformation. And so a situation where you have a PIB, like we've just seen some of the aspects, if confirmed, that will lead to leveraging the market, and it will bring more access to investments into the country. A lot of people want to invest in Nigeria's oil and gas sector, but regulations and reforms are very important, so that will be key. Transparency and governance is the next thing. That's the way forward too. We've seen the whole wastage from subsidy. That should not happen again. The federal government should now explore the new reforms and the possibilities of listing some segments of a state-owned company, that's NNPC, and even venture companies like the LNNG through the capital markets. That's the best way to drive corporate governance. That's the best way to drive accessibility and wealth creation for Nigerians. Because if I have a share in NNPC, you have a share, a lot will happen to spread wealth. Transparency is also required in the management of the joint venture operations with multinationals in Nigeria. We commend the NNPC for the reports we're seeing now, but we need to see more in terms of reports and analysis of the proceeds of these activities and operations. And also the marginal round fields, which we're hearing now. We need transparency in those operations because it's very important to know who got the bid and how transparent it was. Then the host communities. The Niger Delta, it remains the treasure base of the country because it is the producer of what remains a major revenue earner. Its development and transformation is non-negotiable. If you visit the Niger Delta today, it's in a deplorable state. It's very pitiable. It's totally unacceptable, the level of infrastructure in Niger Delta. And so this is to the coordinating ministry, the Ministry of Niger Delta Affairs, and the Niger Delta Development Commission. It is time to eschew politics. It is time to embrace professionalism. And it's time to ensure that there is real development in that region. And this has to do, of course, again, with that PIB when it's signed. We need to see more investments in physical infrastructure, human capacity development, and efficiency. Because those are the key areas in which we can see that this is the region producing for the country and indeed is deriving value from the country. If that doesn't happen, we may have another round of instability in production. We may see that there may be tensions, and for those of us that follow oil and gas updates in the country, every time there is tension in the Niger Delta, it has an impact on our production and revenue. So we have to take that step, being proactive to develop Niger Delta to its full capacity. Next on board is the need to assess how we can really improve our gas-led industrialization. Nigeria's shift to gas-led industrialization is apt and strategic, but must continue to be clear, transparent, and predictable in a way that will attract new investments and provide a robust source of energy and revenue to the country. And then the area of skills and capacity development We need more investments in that area. We have a petroleum university in the Delta region. We also need to build capacity to achieve a competitive workforce in the country that can compete with anyone globally, so that jobs, investments, and activities will not be lost in the country. And most importantly, more strengthen local content. Local content is very important. We've seen the impact already with indigenous companies, like I earlier mentioned, and the National or Nigerian Content Development Management Board. NCDMB is doing its best, but we need to see more in terms of harnessing the entire industry and creating a vibrant industry that provides more opportunities for investments, creates more jobs, and achieves industrialization for the country. And in a nutshell, we've heard much of the narrative of the need for us to diversify our revenue from crude oil. I agree with that. But you cannot discard the fact that oil and gas can help pivot that diversification. So in our economic planning, we must anchor and factor that and learn from the United Arab Emirates and Saudi Arabia that indeed, with transparency, collective purpose, and determination for transformation, we can anchor a diversification to oil and gas and create shared prosperity for all Nigerians. So indeed, we'll make these 6 decades of oil and gas a stepping stone for rapid industrialization. And that'll be all for this edition of the Economy and Politics Show, where we discussed around the oil and gas sector. You can visit our website, www.petroleumindustry.com, to watch videos, read our news reports and analysis, particularly on oil and gas. Send your comments and views to news@petroleumindustry.com, particularly today. What is that thing you would like to see happen more in the oil and gas industry that can unlock growth and development for the country? We will respond appropriately. Join us by 10 a.m. for interesting conversation on market review, where we bring developments in the financial and capital market as it relates to economy. Till we come your way again, thank you for watching. Have a nice day and stay safe.